Hello and welcome to another session of the My Solo 401k Financial, My Community Daily Webinar Series. We're excited to get started today to share and discuss how to save $70,000 to Wealthfront Roth IRA. As always, if you have questions or topics that you want to discuss, please don't hesitate to chat that over, as we're happy to discuss questions or topics around this topic or other topics that are even off topic. If you're watching on LinkedIn or YouTube or Instagram, please subscribe so you get notifications of when we go live. We go live twice a day, once at 10 a.m. Pacific, 1 p.m. Eastern. Then we're back again at 1 p.m. Pacific, 4 p.m. Eastern. As far as today's roadmap, we again want to discuss unlocking $70,000 tax-free with your solo 401k. Here's what we'll cover to supercharge your retirement savings. A solo 401k deep dive to understand its unique power for self-employed individuals. We'll explain the Mega Backdoor Roth, what it is and why it's a game changer for Roth contributions, the 2025 contribution mechanics, how to make these critical after-tax contributions within your solo 401k, and then turning to Wealthfront Roth integration, Roth IRA integration. So in other words, how to convert those voluntary after-tax funds over to your Roth IRA to maximize the tax-free growth. Again, if you have questions or topics you want to discuss, please don't hesitate to chat that over. As always, the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. So just to set the stage, a solo 401k is a retirement plan that's made available to a self-employed individual. So you need to qualify to be able to set up a solo 401k. The way that one qualifies is you need to be self-employed with no full-time W-2 employees, specifically no full-time non-owner, non-spouse W-2 employees. So the fact that the individual, him or herself, is a W-2 employee, or that their spouse is working in the business and paid as a W-2 employee, is not going to prevent that person from being able to set up a solo 401k, as long as, again, there's no employees working for any business owned by that person or a spouse, if any. So that's what gets you in the game. That's what makes you eligible to be able to set up a solo 401k. Now, when you look across the landscape of solo 401k providers, they're not all the same. So if you want to be able to make Mega Backdoor Roth solo 401k contributions, you need to find a solo 401k provider like us that offers a plan that allows for Mega Backdoor Roth solo 401k contributions. So a Mega Backdoor Roth solo 401k contribution is really a voluntary after-tax contribution. So you need a plan that allows you to make voluntary after-tax contributions, and then an in-service distribution where you can transfer those voluntary after-tax solo 401k funds out of the plan to a Roth IRA, like in this case, a Roth IRA at Wealthfront. Moreover, you're going to want to work with a provider like us that has deep experience in helping clients through those technical compliance steps. For example, you need to have separate sub-accounts for pre-tax versus Roth versus voluntary after-tax. And we help our customers open up the accounts at the bank or brokerage of choice. Number two, you want to work with a provider like us that provides the ongoing compliance support, specifically the 1099-R reporting that's required when you transfer funds from the voluntary after-tax account out of the plan to a Roth IRA at Wealthfront. So that's the context that we're working in. Now, the benefits are clear. For example, you can contribute a much higher amount of your self-employment compensation as a Roth contribution if you have a plan that allows for Mega Backdoor Roth contributions. So for example, for 2025, you can contribute 100% of your self-employment compensation, dollar for dollar, up to $70,000 as a voluntary after-tax contribution, and then transfer the funds out of the plan to a Roth IRA, including a Roth IRA at Wealthfront. So the specific steps would be once you're eligible and you have a plan like ours that allows for the Mega Backdoor Roth contributions, step one is opening a separate voluntary after-tax sub-account. So this could be at the bank or brokerage of your choice. Now, Wealthfront, they do, based on experience, we have had customers open up accounts at Wealthfront because they are able to open up what's called a trust account. So this would be an account at Wealthfront opened up under the name and EIN number of the plan. Then you make that contribution. So that can come from a personal account or a business account. The key from a solo 401k perspective is that the contribution is within the contribution limit and made by the contribution deadline. And we field questions every day from our existing customers in terms of how much they can contribute. So we educate our customers on those contribution limits, the deadlines, etc. Then you, step two, transfer the funds from the voluntary after-tax solo 401k sub-account to a Roth IRA. Again, it could be a Roth IRA at Wealthfront. Step three, let us know about that transfer. We don't have access to our customers' accounts, but customers just simply let us know about the transfer from the after-tax solo 401k account out of the plan to the Roth IRA by submitting an online form that they can do 24/7 on our website. It just takes a minute to give us the information. This is how we capture the information we need to be able to prepare the 1099-R that's required to report that after-tax to Roth IRA transfer. You can easily find it at mysolo401k.net/forms. It'll take you right to that page that has the online forms. Now, there is a deadline. As I mentioned, the key from a solo 401k perspective is that the contributions are made to the voluntary after-tax account, a separate account, within the contribution limits by the contribution deadline. There is no deadline, however, to transfer the funds out of the plan to the Roth IRA. So you could be making the contribution by the last day of the deadline period, right? Which is going to be your business tax return deadline, including any timely filed extension. And then anytime thereafter, transfer those voluntary after-tax funds out of the plan to the Roth IRA. Now, typically folks will want to transfer out the funds, shortly thereafter, so that then they can start investing and then they can accrue that tax-free growth inside that Roth IRA account. But technically, there is no deadline to transfer the funds. This is a good slide as it shows us visually how it might look. So this individual has a one participant plan, so it's just them participating in the plan. They've got multiple accounts. Like, let's assume they have a pre-tax account for their pre-tax solo 401k funds. Could be pre-tax solo 401k contributions. It could be money that they rolled over, say from a former employer plan or a non-Roth IRA to their solo 401k. Then they got that separate account where they're holding those voluntary after-tax funds. So that's going to be an account opened up under the name and EIN number of the plan. We obtain an EIN number specifically for the plan as part of the onboarding process. Then they, step two, transfer the funds out of the voluntary after-tax account to a Roth IRA, which again can be a Roth IRA at your choice, including a Roth IRA at Wealthfront. Could be a new Roth IRA at Wealthfront. Could be an existing Roth IRA at Wealthfront. And then again, step three, they let us know about that transfer by submitting the applicable form at mysolo401k.net/forms to give us the information we need to prepare the 1099-R. And we handle that 1099-R preparation as part of our ongoing compliance support for no additional charge, right? As long as it's given to us in a timely fashion, we'll prepare that 1099-R for no additional charge. Well, that takes us to the end of the slides that I wanted to share. We appreciate all the engagement. If you found this to be helpful, please like this video. Please share it with others that you think might be interested. That helps us to get the word out to other self-employed individuals, other solopreneurs, other freelancers. There's a growing number of course, of self-employed individuals. And this can be a great way for those individuals to catch up on their retirement. Also, again, if you subscribe to our channels, whether on LinkedIn or YouTube or Instagram or X, you'll get notifications of when we go live. We go live twice per day, once at 10 a.m. Pacific, 1 p.m. Eastern. Then we're back in the afternoon at 1 p.m. Pacific, 4 p.m. Eastern. You're also welcome to join our community at mysolo401k.net/my community. We have over 30,000 members. We've got vibrant forums. We have a library of videos and webinars. There's a lot of great ways to learn and to share the knowledge. We also have the industry's first AI, which you're welcome to use at solo401k.ai. It's a great way to find answers to questions quickly, other resources. All right, well, with that, we appreciate, again, the engagement. I'm not seeing any questions. So until next time, everyone, take care.